Hello everyone and welcome to my channel once again. In my last video, if you all must have seen, I had said that market looks to be fragile on a weaker side, and I also discussed stocks which needs to be bought in this corrective market. And those were the precise groups and stocks. For example, Asian Paints made a new high. The likes of Bajaj and the HDFC did not fall as much as the other stocks were falling. So I think that was a very good strategy, and one should definitely continue on this set of strategy, because if we see, I think markets will start going up from here on, because what happened on Friday in the presentation of a finance minister, I think it was a very welcoming note and a very welcoming approach towards the market participants, and in particular towards the FIIs, because if we see, for the first time ever, whatever something that had been said in the union budget has been revoked, and it is a very welcoming sign which says that FM or the government do care for our equity markets. So good times are here, and I think one should definitely stay invested, or can start doing fresh buying even at current times. Though globally we have tensions from the US-China trade war side, but if we see, this has been hovering over a year and more now, and every other day you see there is some stance from the President Trump or from the China side, and it's on and off. So one is really confused, in which direction to go. But all I can say is, because US is heading towards the presidential election, and definitely they cannot afford to have lower GDP numbers. So I think US will definitely have some sort of settlement talks with China, because we have seen their yield curve have got inverted, and it's precisely because of all these US-China trade wars. So there would be some settlement happening in a near term, and it would definitely not escalate. So I think one can definitely capitalize on this opportunity and start buying, because if we see, for 2 long years our market did not participate. The mid caps and the small caps have been butchered down since a very long time, and I think now is the time it will start picking up, especially those set of companies which have reported good set of numbers but are getting butchered down because of the mid cap sector as a whole. So I think it is a very correct time, because valuations are at very low, and earnings for some companies are good. Holistically, earnings are not good. The management commentary is weak, but there are few set of companies who have reported good 100% growth on a bottom line, or more than 40% growth on a bottom line, and those are precisely the companies I'm talking about, which needs to be bought in this correction. Now, if we see, on Friday, FM had said two things. One is, of course, revoking of the surcharge being levied on capital gain tax for both domestic as well as for the FIIs, and second is upfront recapitalization of 70,000 crore to the PSU banks, and some set of reforms for the automobile sector. I think this is a good start for in this weaker set of economy, because once the banks gets recapitalized, they will start lending it to the NBFCs, and definitely the liquidity crunch which is there will start resolving. So it is a good start, and that is why I think I had earlier also said that the worst for the PSU banks is over, and from the earlier 2.5 lakh crores of recapitalization, we have seen many banks have come under profits, many banks have cleared their NPAs, and now with this fresh set of capital, I think they will start thriving. So definitely good set of PSU banks for the likes of Bank of Baroda, Indian Bank, Canada Bank augurs a very good buy. But yet I would not say a buy for SBI, because last quarter we have seen it has fresh 16,000 crores of slippages. So it is still very dicey, and that is why we have good set of banks from the PSU side which needs to be bought currently. Now from the NBFC side, of course, it's a big relief for the dormant NBFCs like the L&T Finance and the Mahindra Finance, but I think one should stay away from those two set of stocks, because earnings, unless and until it does not pick up, does not revive, I think it would be like not very certain bet to play on, and that is why where there is certainty, I feel is the Bajaj Finance, though highly valued, but once the entire liquidity side starts improving, I think the market leader would definitely continue to perform good, and that is why, because being on the less risk side, I think Bajaj Finance from the NBFC pack looks good and can definitely move towards its 4,000 mark once again. Now also in Friday we had seen that some announcements were being made for the automobile companies, and definitely it's a welcoming move, because definitely it will have a positive sentiments, and the fact that entire auto stocks has been beaten down for a very long time. So I think one can definitely start buying. I think Maruti augurs a very good buy at current market price. Bajaj Auto also augurs a good buy. And we have seen from the entire auto slowdown, Bajaj Auto was the only company to report 5% degrowth in its volume sales last month, as against other companies who were reporting slowdown or degrowth in double digit. So definitely Bajaj Auto is a good buy, and one can definitely buy at current market price, even as a fresh buying. So automobile stocks, I think now will have a good festive season as compared to what we had seen last festive season, and probably I think though it's a late start to the festive season, but it would last longer. So definitely auto stocks are a buy, and the ones like Maruti and Bajaj Auto is a screaming buy at current market price. So I think one should definitely have once again this strategy of not experimenting with too many stocks, and just focused on 5 to 6 set of stocks which have proven good set of earnings even during bad times, for the likes of Ultratech from the cement pack, where we have seen almost a doubler on the bottom line, or a 100% growth at a bottom line level, with minuscule miss on the volume set, which can be given as a benefit of doubt. And definitely the fact that Ultratech has fallen below its 4,000 levels augurs a very good buy. I think from the real estate pack, Shobha Limited, as we have discussed, and from the mid cap pack, I think KEI industry looks good, because of course the cable wires and all the segment that it is present into, it has a good demand and a good micros. If we see, it has grown at 40% on the bottom line level, which is very good. So KEI also augurs a good buy, and one can definitely start looking on the infra side, because I think once the liquidity crunch improves, and with this kind of recapitalization being done upfront, I think infra augurs a very good buy, and that is why good set of infra companies who have reported good numbers, I think GMR Infra augurs a good buy. Because if we see on a consolidated pack, it has come profitable. Many of its airports like Hyderabad Airport, Delhi Airport has turned net cash flow positive, and I think it's a very good sign. And the fact the risk reward ratio for GMR is also very low, so one can definitely tune into or buy GMR even at current market price. I think this is it from my side in this video. These are the only set of stocks that you all should be looking at, and if you're let's see how does it pan out in the next week, and one can definitely look at these stocks from the long-term horizon as well. So if you all enjoyed watching my video, do like, subscribe and share with as many people as you all can. You all can also follow me on Twitter, where I keep giving timely updates, and that's it from my side. Let's tune in next Sunday for more updates. Till then, bye.